If you think you know the global real estate market, well, you might want to think again. The map that you're used to is being completely redrawn as we speak, and honestly, by 2026, it's going to look almost unrecognizable. So today, let's explore what this new world looks like and, more importantly, what's driving this incredible transformation. Go ahead, take a second and picture your own mental map of real estate. You know, where are the safe bets? Where are the hot spots for growth? Now, what if I told you that map is basically becoming obsolete in just a couple of years? That's the wild reality we're facing, and today we're going to give you the new map you'll need to navigate it. All right, so what's the very first thing you need to understand about this new map? It's that the ground it's built on, well, it's actually surprisingly solid. We're not talking about a market in crisis here. No, this is about a market in the middle of a massive, fundamental shift. And here's the number that sets the stage. 2.8% global GDP growth is forecasted for 2026. So you see, this isn't a recession story. The global economy is actually on a pretty sturdy growth path. The real story, the one changing everything, is the massive reshuffling that's happening just beneath that stable surface.
And this is where the new map starts to get really interesting. A deep financial fault line is cracking open, and it's dividing the world's major economies. And the whole thing is being driven by the radically different playbooks their central banks are using.
On one side of this divide, you've got the US and Europe. Their inflation is finally cooling down, so they're getting ready to cut interest rates, which makes it cheaper to fund real estate projects. But then, on the complete other side, you have Japan. After decades of stagnation, things like inflation and wage growth are finally taking hold. So their central bank, it's moving in the exact opposite direction. It's raising rates.
And it's so important to get this. This isn't just a temporary market fluctuation. This divergence in policy is a true structural factor. It's something that's going to reshape how money flows across borders for a long, long time. So, this high-level economic split is creating an equally dramatic divide right down at the property level. The new map isn't just about what country you're in anymore, it's about the specific building you choose.
The word you're going to hear everywhere by 2026 is bifurcation. You can forget that old saying about a rising tide lifts all boats. In this new market, it's much more like a world of luxury yachts on one side and sinking dinghies on the other. All the capital is flowing to a very specific type of asset, and it's leaving everything else behind.
So who's sailing the yachts in this scenario? The prime assets. We're talking about the brand new, eco-friendly buildings in absolutely unbeatable locations. Think of a logistics hub powered by its own solar grid, or a smart office tower with the latest tech. These are the properties that have tenants lining up, and their value isn't just stable, it's rock solid.
And the dinghies? Yeah, they're the older, outdated properties. You know the ones. Dated facilities, high vacancy rates in our new hybrid work world, and just constant downward pressure on their value. These are the assets getting left behind.
This massive shift actually has a name, the flight to quality. And it's exactly what it sounds like. Big money is literally taking flight from average or risky assets, and it's all landing in one safe place, that small, elite group of prime properties.
But wait, the new map isn't just being redrawn by financial policy. There are two other massive forces at play that are fundamentally changing what makes a property valuable in the first place: technology and power.
You see, the AI revolution is creating an absolutely insatiable demand for data centers, and these things are incredibly power-hungry. We are talking about a surge in electricity consumption that's going to reshape energy grids and, you guessed it, the real estate market itself. This all leads to a fundamental change in the most important question in real estate. It's no longer just, do you have the land? The new question is, can you get the power? On this new map, access to a reliable, high-capacity power grid is the ultimate prime location.
So our very definition of real estate is expanding. It's not just about buildings anymore, it's about social infrastructure. You know, the data centers, the power grids, the logistics hubs that form the backbone of the entire modern economy.
Okay, so we've got these huge global forces: a divided monetary policy, a flight to quality, and the rise of AI and power. Now let's zoom in and see how they all collide in one of the most interesting markets in the world right now: Japan. With Japan raising its interest rates, the old real estate playbook is basically being thrown out the window. For years, investors could borrow money at almost zero cost. But now, as borrowing gets more expensive, that yield gap, that sweet spot between what a property earns and what it costs to finance, is disappearing fast.
But here's the twist. This challenge is also creating some incredible new opportunities. For the first time in decades, rising wages mean landlords can actually raise rents. Moderate inflation lets them pass on their costs, and a weaker yen is fueling a massive tourism boom and making Japanese real estate look really attractive to international investors.
So what does this all mean for the future of property value? It really boils down to passing two critical tests. First, the rent power test. Can the property command rents that actually outpace rising costs? And second, the adaptability test. Is it equipped to handle the new demands for power, for technology, and for sustainability?
So there you have it, the new real estate map for 2026. It's a world defined by divergence, by bifurcation, and by the new demands of technology. The question isn't just whether you're ready for it, but where on this new map you'll choose to place your bets.
If this explainer helped you get a clearer picture of this new real estate map, do us a favor and help spread the word by hitting that like button and subscribing for more deep dives into the trends that are shaping our world. Thanks for watching.